So here today talking Trump's first week in office. We're not quite there. It is Friday early and the U.S. has not even woken up yet. Ola, who knows what today could bring, but I think rather than focusing in on every single thing that's going on this week, it's a bit broad brush on what this first week has brought and what we're looking for next from the Trump administration and from Trump himself. Really the number one thing markets are looking for is what the heck is going to happen with tariffs. And we have so much noise, conflicting headlines on that front, but we have a bit more firm things in your space in commodities. So let's look at what we have here. We have a Trump that clearly wants more oil produced and wants that oil price lower. He's encouraging both more production in the U.S. and then now he's at Davos, at a Davos speech telling OPEC, let's see some more production. Let's see these prices down.
Yeah.
What are your takeaways? What do you think is who's going to be incentivized to actually do what Trump wants, if at all?
Yeah, well, this news has most certainly been the one that's kept me very busy this week, trying to gauge and trying to understand it. But I think what's important, first of all, is to understand that the U.S. producers are not state-run companies. They basically produce oil if they see they can make a dime, make a buck. And right now, with the outlook for global demand, probably not peaking just yet, but at least showing some signs of slowing down in the coming years, and with prices in need of being at a certain level for this new production to be profitable, I think it's not going to be the focus on the oil market that's really going to be driving this renewed push towards increasing energy production in the U.S. A lot more focus on the gas market, where simply because we are in a world where we're not going to run out of oil. There's plenty of oil out there. We're going to see a peak in demand within a few years. We're probably not going to run out of gas either. But at times we could be really stressed on the power front because the electrification of the world is gathering momentum. The data centers that's required to run all the AI initiatives, that's going to gulp up a lot of power. So that's really where the focus is going to be. So we're going to need a lot of gas in the coming years. In Europe, we are dependent on gas coming from the outside. So we need American gas. So if they're going to need more themselves, then obviously they need to be producing even more so we can get some as well. So the gas is really where we're going to see the pickup.
And in terms of the price, and what about the Saudi angle? His telling OPEC produce more. So that's the oil price. What about the oil and gas price? Do you think it's really being dramatically affected day to day, week to week? Or do you think a Saudi says, oops, I need to make sure I curry favor with Trump, therefore maybe I will up my production? These kinds of perspectives.
Well, if we look at oil prices now for the past 3 years, we've been relatively stable looking at Brent crude trading around $80. We've had a few highs and few lows, some of that geopolitical driven, but generally we've been trading sideways. And the reason for that is simply that OPEC has tried to manage production to maintain a stable price. So suddenly going out to an increased production and thereby dumping the price in order to gain favors with Trump, I just simply don't see that happening. What potentially could happen is that there's further sanctions against Russia, Iran, and Venezuela. That basically leaves more room for the other OPEC producers to increase to mitigate that shortfall. But I don't think we're going to see suddenly Saudi Arabia saying, okay, fine, let's just increase production and dump prices down to the 60s. Because what happens if we get down to the 60s? U.S. producers will start to turn down the taps because and then suddenly it becomes some of these high-cost production fields becomes uneconomical. So there's a sweet spot here in the oil market, and you really can't force it in either direction.
A sweet spot. Well, there's not a sweet spot in understanding what Trump's actual tariff plans will prove to be. The market is really, I think, we're sort of defaulting to the side of he's going to go easy on tariffs for now. There was a Wall Street Journal report out just before his inaugural address, in which it was indicated, or in the article, that a memo went out saying he's going to task federal agencies with investigating various trade relationships to come up with a report. That felt like, okay, no new tariffs on day one, and of course there weren't any tariffs on day one. Since then, we've seen the endless stream of headlines threatening tariffs on China, Canada, Mexico, on the fentanyl trade, on Europe for persistent trade surpluses, on Russia they better end the war or else. We're going to do tariffs on you, and maybe even those that are buying Russian products would be the sort of an indirect threat there. And then at Davos, he comes out not just on the oil front, but also with sort of a general exhortation to the world: look, make your products in the U.S., otherwise you're going to get tariffs. And then on the same day, he's in a TV program in which he says, I prefer not to tariff China, at the same time waving around and seeming to enjoy the idea that the U.S. has this tremendous power to tariff China because China is really afraid of us, almost sort of a power brag. So this tariff, whether they're going to happen, is really critical for across markets. It's critical for the dollar and therefore the commodity space as well. I'm quite convinced that tariffs will happen. What I'm not convinced at all about is understanding if it's going to start at a low level and be ratcheted higher with a series of threats on a schedule of increases if the targeted nation doesn't move to satisfy whatever Trump is and the administration is looking for. But the path to get there is what I don't quite understand.
No, and what it basically means as well is that we're going to jump from one headline to the next now for the foreseeable future. So that kind of volatility is most certainly back in the markets. And you would have thought that that there will be some that has got Trump's ear that they will tell him that just go easy here because this is not a win-win situation. We're not going to increase domestic production by raising tariffs. It could take time. It might even not be in your 4-year tenure. And at the same time, a general global trade war. What will that do to general global economic growth and demand? We have to still remember that around half of the S&P earnings, the S&P 500 index earnings, comes from abroad. So it's not just a question about making America great. If you make America great at the expense of everyone else, then they're not really getting to the point they want to get to.
Really critical points. And just to round out the conversation here, a couple of points that I'm really looking for that we won't get answers to in the coming days. It's more of a coming months and quarters is a couple of areas. So there's this push and pull of the deregulation, which is very obviously pro-growth. He's already sort of aggressively moved on the energy sector, clearly opening up any environmental regulations and restrictions around energy. He even says open up Alaska to oil production. That's obviously part of the 333 agenda of the Secretary of Treasury incoming, Scott Bessent, 3% growth. And then there's the 3% deficit reduction, which operates against that because a lot of the U.S. growth in recent years has been driven by fiscal deficits and large spending by the government. So there's a lot of push and pull on what that means for the economy. And finally, as we've basically talked about, the 3 million barrels per day and whether that happens and whether it's the right kind of crude, et cetera. So that's one area. But the other areas I think that are quite interesting is whether he will get away with, on the checks and balances fronts, an executive branch here in the U.S. that just sort of rides roughshod over the U.S. Constitution, checks and balances. He's tried to, via executive order, to end so-called birthright citizenship. This is something that's actually in the Constitution. It's in the 14th Amendment. Is this even possible? It would make suddenly people that were born in the U.S. and are U.S. citizens now and have lived their whole life in the U.S. and started jobs and careers because they were the child of an illegal immigrant, suddenly they would be stateless in theory. I simply don't see that happening. I think the U.S. Constitution holds in some of these areas, but there are sort of more nuanced areas like in reversing some of the spending that was done under Biden or the allocation of spending and whether that's constitutional. So a really key area there. And then finally, the test of his congressional power, really critical when you have a House of Representatives in the U.S. that is so finely balanced. It's a tiny majority there. There's a Freedom Caucus that is not in favor of fiscal deficits and could limit some of his spending. And even more sort of close in here in the next coming days are some of his nominations and whether those pass the Senate. So the degree to which Trump has fully dominates the Republican Party, I think, is really critical to understand the policy strength from this Trump administration for his at least for the first 2 years, because usually we get the midterms and then he loses at least one of the sides or one of the houses of Congress. I think that rounds it out, and I will, of course, be back, as the developments demand, with additional videos and thoughts on where things are headed. But Trump 2.0 will continue to rock the markets until we get a better shape of where things are headed.